Good morning. This is Business News coming to you live from our Rayfield studio. My name is Karen Lucas. On the news this morning, the Central Bank of Nigeria, CBN, has directed banks, fintechs, and other operators in the payments ecosystem to store all payment transaction data generated in Nigeria within the country, while also introducing measures to curb excessive market dominance in the industry. The Apex Bank disclosed this in a circular dated June 15, 2026, titled Introduction of Market Structure Requirements, Data Localization, Ultimate Beneficial Ownership Disclosure, and Systematic Oversight Measures in the Nigeria Payment System. According to the CBN, all financial institutions and participants facilitating payments within Nigeria shall ensure that payment transactions data generated within Nigeria are stored and managed in Nigeria in accordance with data protection laws and regulations applicable in Nigeria. The bank added that all affected financial institutions shall fully comply with this requirement effective January 1st, 2027. On ownership transparency, the CBN said all deposit money banks, payment service providers, and other financial institutions within digital payments footprints shall disclose the ultimate beneficial ownership UBO of significant shareholders in accordance with applicable extant laws and regulations, including anti-money laundering, combating the financing of terrorism, and counter-proliferation financing regulations. The Apex Bank further directed that institutions shall maintain accurate and up-to-date UBO records and make sure information available to the CBN upon request. Explaining the rationale for the new measures, the CBN stated, the Nigerian payments ecosystem has witnessed significant structural development characterized by rapid growth in electronic payments, increasing adoption of digital financing services, and the emergence of operators with substantial market presence across key payment activities. It noted, however, that these developments have also raised concerns relating to market concentration, operational dependence, systematic importance, transparency of ownership structures, and the localization of critical payment data. To address these concerns, the bank introduced market structure requirements under which any licensed financial institution engaged in card issuing activities that holds more than 25% market share in card issuing shall not hold more than 15% market share in merchant activities during the same period. Now, equities mostly rose Tuesday and oil prices held losses following the previous day's euphoric rally sparked by the US-Iran peace deal that will reopen the crucial Strait of Hormuz. Eyes are now on developments ahead of Friday's signing ceremony in Switzerland, which will bring an end to more than 3 months of a war that has sent shockwaves through energy markets and sent global inflation soaring. US President Donald Trump said ships were again moving through the strait and it would be completely open by Friday, while Iranian media said 3 oil tankers and 2 cargo ships had passed through the area that had been subject to a US naval blockade. Tehran blockaded the waterway after the United States and Israel launched their war against Iran on February 28. The United States then blocked shipping to and from Iranian ports. A senior U.S. administration official, however, said Trump, Vice President J.D. Vance, and Iranian's parliamentary speaker Mohammad Bagher Ghadibaf had already signed the text electronically. Oil industry watchers cautioned that market conditions will likely be tight for a period of weeks or months. Fresh U.S. Department of Energy data showed strategic oil stockpiles tank last week to their lowest level since 1983. Shipping groups warned Monday that it was too soon to safely resume sailing. The deal sparked a huge relief rally across global equities, with the Dow on Wall Street hitting a record high, while crude prices plunged almost 5%. The optimism remained largely intact Tuesday, with both main crude contracts barely moving and stocks mostly up. Revenue generated from value-added tax (VAT) and company income tax (CIT) fell year-on-year by 6.2% to 3.97 trillion naira in the first quarter of 2026 from 4.04 trillion in the first quarter of 2025. The National Bureau of Statistics (NBS) disclosed this in its report on VAT and CIT for the first quarter of 2026, which showed that the decline in revenue was driven by a 3.08% year-on-year fall in CIT during the period. According to the NBS, CIT fell to 1.37 trillion naira in the first quarter of 2026 from 1.98 trillion naira in the first quarter of 2025. However, value-added tax grew by 19.8% year-on-year to 2.42 trillion naira year-on-year from 2.02 trillion naira in the first quarter of 2025. Similarly, value-added tax increased by 9.98% quarter-on-quarter from 2.20 trillion naira in the fourth quarter of 2025. The NBS also stated that of the total CIT collected, domestic CIT contributed 538.91 billion naira, while foreign CIT payment accounted for 828 billion naira during the quarter. In terms of sectoral shares, the activities with the largest share in the first quarter of 2026 were financial and insurance activities with 24.73%, mining and quarrying with 16.06%, and manufacturing with 13.82%. Conversely, activities of households as employers, undifferentiated goods and services producing activities of households for own use recorded the least share with 0.01%, followed by activities of extraterritorial organizations and bodies with 0.13%, and water supplies, sewage, waste management, and remediation activities with 0.38%, it said. As prices of liquefied petroleum gas, cooking gas, rose by about 140% in many locations across the country, marketers of the commodity are perfecting plans to massively import the product to make it more affordable and available. Findings showed that cooking gas prices jumped from an average of 1,000 naira per kilogram in January and February this year to as high as 2,400 naira a few days ago. Industry sources told our correspondent that the regulator is issuing licenses for the importation of cooking gas. This is also because local producers of LPG have been unable to meet domestic demands for gas, according to operators. For example, the sources stated that there is a decline in LPG supply from the Dangote Petroleum Refinery due to internal utilization, not because the refinery exports, as is being speculated. The source further explained that this had to do with the refinery's recent ramp-up to 700,000 barrels per day amid higher global fuel demand. Consequently, marketers were allowed to bring in enough LPG to end the current scarcity and crash the prices, which have risen from less than 1,000 naira earlier in the year to about 2,400 naira per kilogram. An official in the Nigerian Midstream and Downstream Petroleum Regulatory Authority, who also spoke in confidence, said The regulator is collaborating with the Nigerian National Petroleum Company Limited and other key stakeholders to further boost LPG availability in the local market. Speaking in an interview, spokesman for the Minister of State for Petroleum Resources, Gas, Ekperikpe Ekpo, said marketers have committed to importing larger volumes of LPG. Dangote Petroleum Refinery has reduced the gantry price of premium motor spirits petrol by 75 naira per litre. In a circular to fuel marketers on Monday, the refinery said the adjustment followed the de-escalation of the tension in the Middle East, which had impacted energy prices in the past 3 months. It added that the new gantry price is now 1,175 naira per litre, down from 1,250 naira, while the coastal price has also reduced by 1.495215 trillion naira. The refinery said the new rates will take effect from midnight. According to petroleumprice.ng, the Dangote refinery is now the cheapest petrol, as many marketers sold it for around 1,240 naira on Monday. The latest reduction comes amid easing tensions in the global oil market following reports of ongoing negotiations between the United States and Iran over the reopening of the Strait of Hormuz. Oil prices, which had surged to about 83 per barrel as of Monday after Trump announced the signing of the deal. Crude oil, the major feedstock for fuel production, had risen sharply since the outbreak of hostilities between the United States and Iran on February 28. During the 3-month conflict, crude prices climbed above 120 per barrel, triggering higher fuel prices. In Nigeria, petrol prices rose from about 830 naira per litre to around 1,300 naira per litre during the period. Diesel and aviation fuel prices also recorded significant increases. With crude prices now retreating, the adjustment by the Dangote refinery is expected to bring further relief in domestic fuel prices. And that's a wrap on business news this morning. Do remember to stay tuned for News Track at 2 p.m. as well as global news at 6:30 p.m. Thanks for watching.